Hello, good morning and welcome to this brand new edition of the newspaper show right here on ET Now. I'm Shel D'Souza and I'll take you through all the top stories that's there on the Economic Times this morning for you. But let's get going with the top 10 headlines that's there for you on the ET this morning. And starting off is with TATA Motors. They reported their Q4 earnings yesterday where they posted a 9,900 crore rupee loss in Q4. Moving on to another headline coming in from the Tata Group. The Tata Group companies prepared to tighten their belts. Moving to the banking space, banks oppose a waiver of loan interest. Mumbai Airport gets a nod to double the flight operations. Moving on to aviation space, another news coming on that front. And Bombay High Court allows airlines to allot middle seats. Exports bounce back to last year's level, that is as per the trade data. IEX launches India's first gas trading platform. Chief ministers may seek more relaxations and funds. From today onwards, you have the Prime Minister and Chief Ministers meeting begin. Moving on to Delhi, Chief Minister Arvind Kejriwal is saying the labs do double down on tests. Lastly, ICMR okays antigen test for COVID-19. So those are the top 10 headlines that's coming in from the Economic Times this morning for you. But let's move on and let's get to the top market headlines that's there in the newspaper. First up, fear goes viral again on the Lal Street. This is as per yesterday's closing. Moving on to Wall Street, cuts losses, swings on virus fears. Indigo aims to operate at 50% capacity by July. PNB Housing seeks to raise funds via rights issue. And lastly, analysts downbeat on BHEL after poor Q4 show. These are the top 5 market headlines that's there on the Economic Times. Let me take you through the top 5 corporate headlines that's there in the paper. First up is pharma companies scale up hiring as production rises. Moving on to Axis Bank, their retail banking head has quit the company. MSME revenue to fall 20% in FY21, and this is as per CRISIL. TV sales spurred 35 to 50% since May. And lastly, business at malls at 25% pre-COVID levels. All right, and those are the top 5 corporate headlines coming in for you from the Economic Times this morning. But let me take you through a story that's there on the front page of Economic Times this morning, and it is about the banking space and on the moratorium issue where the banks oppose waiver of loan interest. This is in response to the moratorium case, but what else are the banking sector asking for? Let's go across to my colleague Poonam to take us through the details of the story and the case. Poonam, good morning. And what are the banks actually saying in response in the moratorium case?
Well, in a virtual meeting between RBI, IBA as well as the Finance Ministry, bankers are now opposing allowing waiver of interest during the moratorium period. Do note that Supreme Court had asked RBI to have a meeting with the Finance Ministry to consider interest waiver during the moratorium period, as there was a PIL that was there in Supreme Court seeking a waiver during the moratorium period. Hence, as a response to that petition, RBI had stated in the Supreme Court that a waiver of interest would mean a hit of nearly around 2 lakh crore to the banking system, which is 1% of the GDP. It would impact financial stability of the entire banking system as well as financial viability of the banks, because the interest that the banks earn is in fact the revenue in order to help them maintain margins and of course pay interest to the depositors. RBI had also stated that RBI also has a mandate to protect the interest of the depositors as well as maintain or ensure financial stability of the entire banking system. Bankers also are now opposing the idea of a waiver of interest during the moratorium period. This case is now going to be heard on June 17th in the Supreme Court, and we will have to wait and watch out for what the Supreme Court now has to say.
Thank you, Poonam, for taking us through that story. But let's shift focus to some earnings. And Tata Motors reported their Q4 earnings yesterday. How were the earnings? Karunya is standing by to take us through the details. Karunya, good morning. Take it away.
It's really been a tough quarter for Tata Motors in Q4 this time around. Do remember the company has been implementing very stringent measures, very tight cost control as well, not just for the consolidated basis but even for JLR. So after trying to turn the company around so hard for the last 2-3 quarters, this pandemic, BS6 transition and the overall slowdown in the economy has once again sort of pulled them back to those levels. So we're looking at a very significant loss of close to 9,900 crores. We were expecting about 1,300, 1,400 odd crore worth of loss, but what they have delivered is very surprising, very shocking. Revenue is down about 27-28%. They reported margins at 4.6% level. So clearly they have slipped back to those dismal levels that the company was struggling and had struggled so hard to get out of. If you look at JLR, the retails were down 12%. Net revenue is down 5%. It came in at about 23 billion pounds. EBIT just about broke even. EBITDA margins came in at 4.8% and the loss before tax has come in at 422 million pounds. So overall, a very bleak quarter, I would say. Q4, the management for consolidated and even JLR has said was significantly impacted by the COVID pandemic. They've responded to the current situation. They have implemented rigorous cost and investment controls to conserve cash, but it will take some time for the company to stabilize. They're seeing gradual recovery in China, which is encouraging. But for other markets, they want to stay cautious with their commentary and with their outlook as of now. They've increased project charge target for March 21 to 5 billion pounds, implying 1.5 billion pounds of cost and cash savings in FY21. So they're getting aggressive as well with respect to their project charge targets and timelines. They've deferred and or cancelled lower margin and non-critical investment. For JLR, they're targeting an investment spends of about $2.5 billion pounds in FY21, and for consolidated Tata Motors, they are looking at about 1,500 crores in FY21, which is for both the companies significantly lower than what they were spending in FY20 and even FY19.
Thank you, Karunya, for taking us through Tata Motors Q4 earnings and the performance on that front. But staying with Tata Group companies, here's a story that's there on the front page of Economic Times, and this is the story that I'm talking about, that as revenues thin, Tata Group companies prepare to tighten the belt. So this story is filed by my colleagues at the Economic Times, Kala Vijay Raghavan and Rajesh Mascarenas. Let me take you through what the story actually is saying, that Tata Sons board okays cost-cutting exercise at holding company and group firms to conserve cash. The 113 billion Tata Group has initiated a large-scale cost-cutting exercise across the holding company, that's Tata Sons, and the operating firms as part of the effort to ensure liquidity amid revenue loss caused by COVID-19 pandemic. As per the officials, the cuts will impact all functions including the finance, marketing, human resources and branding. This exercise was approved by Tata Sons board in the June 5th board meeting that they had. So here is a small infographics that's there on the paper that actually takes you through what is the cut all about, what is the step that they're taking. So when you say what is the entire measure that Tata Sons board is looking to take, is fresh rounds of massive cost cutting exercise across group, including salary cuts. And why are they doing it? It's a part to ensure the efforts to ensure they have adequate liquidity. Exceptions will be the capital to be allocated to growth businesses, including proposed medical devices ventures. And what is going to be delayed is strategic decisions around Tata Steel UK and Jaguar Land Rover could be delayed owing to the current situation. So there you go. That's a story coming on the Economic Times on the Tata Group companies. But let's move on and let's talk about another important development that will be taking place through the course of the day, and that is the Prime Minister and CM meeting that is supposed to be held today. So there are going to be a series of meetings starting from today that the Prime Minister will be holding with state chief ministers. It's on the page 4 of your Economic Times, and this is the story that I am actually talking about. The Prime Minister will be meeting the Chief Ministers, but what is on the agenda and what will be discussed? I'm joined by my colleague Ruchi to take us through the details. Ruchi, good morning. Take it away.
Prime Minister Narendra Modi will hold an all-important meeting with Chief Ministers for the next 2 days. Today, he will be meeting and speaking to State chief ministers of almost 21 states like Punjab, Assam, Kerala, Uttarakhand, Chhattisgarh, Tripura, Himachal Pradesh, and tomorrow he will be speaking to the rest of the remaining 15 like Maharashtra, Tamil Nadu and Delhi. This is the first meeting via video conference that the Prime Minister is going to hold after Unlock 1.0, but is coming in the backdrop of the high number of COVID cases. In fact, the last 3 days alone we have seen almost 11,000 odd new cases being reported each day for the last couple of days, with the total number of coronavirus cases now surpassing the 332,000 mark. Having said that, the fear now is that some of the cases may implode, some of the states may implode in terms of the number of cases, and which is why we need foolproof health infrastructure. Hectic meetings have been underway in the national capital as well, with the Home Minister himself chairing a meeting with the Delhi Chief Minister, as well as an all-party meeting as well, and have talked about the need for more testing in the days to come. So expect this meeting once again to talk about how we need to continue with economic activity. We cannot have another lockdown in the country, and yet we need to ensure that social distancing should be a way of life, a part of life, and which is why we need to build health infrastructure in such a way that some of these concerns can be aptly dealt with. Having said that, I also expect the states to once again ask the centre for more funds in the aftermath of the COVID crisis. Remember, they're struggling with revenues, they don't have any GST collections, and which is why they would need funds. So expect them to ask the centre for more funds. Having said that, this is going to be a critical meeting that will indicate the way forward, not just for India, for states, but also for the Indian economy. So an important one to watch out for.
Rightly said, Ruchi. This is an important meeting. It will decide the way forward, definitely, as per Economic Times, and what my colleague Ruchi also said, the PMA urged chief ministers to focus more on testing as well as screening. But let me now shift focus to a story and to an interview, exclusive interview that's there on your ET Markets page, and it is of the Indigo CEO that you have, of Ronojoy Datta. He spoke exclusively to Economic Times, and he's saying that if they want to resume international flights operations too, saying that Indigo aims to operate at 50% capacity by July. The trend post resumption of operations is encouraging, but profitability for airline is at least 14 months away. That is the word coming in from the Indigo CEO. Like I mentioned, they want to operate half of its total daily capacity of 1,500 flights in July, and simultaneously resume the international operations, possibly to the Gulf region. Also, he's saying that the airlines have been barely, if you see, airlines have barely been able to fill 50% of their flights on an average, and government data for the past week actually reflected that particular factor also. What else is the CEO saying? He's saying that we have been very encouraged by what we have seen in the first few weeks of travel resumption. We have always known that there was a pent-up demand that would play out in the first couple of weeks. However, the trend since then has been encouraging, and we have analyzed the traffic every 5 days, and all the trends are showing up. So there you go. That's the Indigo CEO sounding quite optimistic about the demand scenario coming in for the aviation sector, but definitely also flagging in that the profitability for the airlines is still 14 months away, at least 14 months away. So there you go. That is the Indigo CEO exclusive interview on the Economic Times for you this morning. But let me shift focus now from Indigo to the TV sales. If you see the story that is there on the Economic Times now, page number 7. Just mind me till I flip my pages. Here you go. This is the story that I'm going to talk about, and or rather my colleague Vinny is going to talk about. This is the one. Stuck at home for days, Indians rushed to buy large screen TVs. So yeah, this is what the story is. The demand has risen up to 50%. To talk more on this particular story, I have my colleague Vinny joining us. Vinny, take us through this particular story that the TV sales have seen an increase.
With Indians stuck at home, post the lockdown, as the lockdown started easing, Indians have rushed to buy large screen TVs, is what the ET Now report suggests. Now, this is after a 2 years decline in the TV sales. The national TV sales have seen a 35 to 50% spurt in the sales in the last 1 month as the lockdown was easing. Now the sales for large screen models have grown by 2 to 3 times compared to the pre-COVID levels, that is in Jan and February in the same period last year. So that is a very big jump that we are seeing in the growth of TV sales. Now brands like Sony, Vijay Sales, Panasonic, Kodak Thompson, all these said that this is the first time that they are seeing the sale of larger models, that is the 43-inch and above TV, seeing more sales than the 32-inch TV. So that is surely showing that consumers are changing their viewing patterns as well. And especially with now movies releasing on Netflix, Amazon Prime, surely is changing the behavior of how consumers will be watching TV, and maybe multiplex will altogether see a decline, while large TV sales have surely seen an increase in sales. Now if you go to see certain like Samsung's vice president did say that they have reported a 1.4 times growth in the 4K UHD TV segment and a 1.6 times growth in the QLED TV segment. So these are good quality TVs, higher quality and large TVs which have seen the lockdown. And he also said that tier 2, tier 3 cities and rural areas are also seeing a pickup in smart TVs, and that is 43 and above inches. So that is surely showing a changing pattern in the TV segment. Now Flipkart also said that categories like mobiles, laptops are already seeing a large demand as the lockdown is easing, and the television sales have also doubled as well. So that's surely showing a change in the pattern. And in fact TV makers are facing constraints for to scale up their production due to labor shortage, and this is seen due to the high demand. They cannot meet the demand due to the labor shortage. So that is something very interesting that we are seeing in the TV segment.
Thank you, Vinny, for taking us through the interesting development that's coming in when it comes to TV sales, seeing a rise, and that is for the higher resolution, a higher inches screen. That is for the TV sales are seeing a rise, a rapid rise rather. Let's move on and let's talk about the aviation space. There's a story that's there on the page 4 of Economic Times, and this is what I'm going to talk about. That is Bombay High Court decision that's come in yesterday. They've allowed airlines to allot middle seats in flights. So why is this, what is this case all about, and why is such a move coming in, and how it will impact the aviation sector? I have my colleague Varun joining in with the details. Varun, good morning. What is this case all about, and what does this mean for the airlines?
Right. Hi, Cheryl. Good morning. So, you yourself were talking about Indigo Airlines just 5 minutes ago. So, all the troubles airlines are facing, like you said, no profitability for the next 14 months. Flights are running at very low capacity. They're poaching pilots from other airlines. They're poaching critical staff from other airlines. And all pilots have been given a 25% pay cut. And also some of them even get 5 days compulsory leave every month. So when all this is happening in the aviation industry, how can you let the middle seat of the flight go empty? And that's what the airlines are arguing. As it is everywhere possible, they're losing money. And if you keep all the middle seats of the flights empty, you're losing almost 1/3 of all the space on the flight and all that money that can come in from revenue. So they've been asking the High Court to, implement something where they can convince the regulator to allow middle seat bookings, and that is what has happened. Bombay High Court has now allowed airlines to allot middle seats in the flights, but you have to adhere strictly to the safety norms. Now, this now also includes that the passenger who's sitting in the middle seat has to wear a gown. It's like a full-blown hazmat suit, which also has a 3-inch face mask. So these are the precautions that they are currently saying that the middle seat passenger will have to take. And if they do this, they're confident that they can keep the COVID spread in check. So basically, airlines will now be able to charge some additional revenue per flight for selling those middle seats. And if you're in the middle seat, you will have to make sure you're very heavily covered up.
All right, Varun, thank you for taking us through the story in details. Bombay High Court allows airlines to allot middle seats in flights. Let's move on now and let's talk about a story that's there on the page 9 of Economic Times, and that is about the IEX, that is the Indian Energy Exchange. They've launched India's first natural gas trading platform. They've launched the nation's first delivery-based natural gas trading platform, that is Indian Gas Exchange or IGX. IGX will actually offer 6 market products, beginning from day-ahead market and forward contracts, including daily, weekly, weekday, fortnightly, monthly at 3 physical hubs in Dahej and Hazira in Gujarat and Oduru in Andhra Pradesh. So this is a recent development coming in from IEX. They've launched India's first natural gas trading platform. The exchange will help in transparent discovery of domestic gas prices. That is a word coming in from Oil Minister Dharmendra Pradhan after inaugurating the gas exchange. From the oil and gas space, now let's move on to the pharmaceutical space, and here it is, another story that's there on the page 9 of Economic Times, and a very interesting and good development coming in, that is pharma life sciences companies scale as productions have risen. 30,000 vacancies exist in sales, R&D, production and cost control. That is as per a staffing company, Zephyno. Hiring by pharmaceuticals and life sciences companies have gone up by 7 to 8% over the last 40 days and is likely to surge up to 25% in the next 6 months as they ramp up drug production to meet domestic as well as global demand in the midst of COVID-19 pandemic. So you have pharma companies that are eyeing fresh manpower. Hiring is triggered by the rise in the production and the demand rise for drugs. Experts say the new recruitments are up by 8% till now. Who are some of the recruiters? You have Zydus Cadila, Sun Pharma, Cadila Pharmaceuticals, Dr. Reddy's, as well as Glenmark. The hiring is at leadership, entry and mid-level. So that's a recent development that is coming in from the pharma and life sciences space, that they have scaled up the hiring. Now let me move on and get you the top 5 headlines that we have on the Times of India for you this morning. Starting up, it is about the India's toll coming in for COVID-19. India sees a record 396 deaths in a day. Next, you have 12-day intense lockdown in Chennai. You have Maharashtra schools may have to open 2 shifts. You have fuel rates that have risen for 9th consecutive day. They've touched a 6-month high. And officials push for a revision in the GST slabs. All right, and in